ये मैंने तेरा खुला सुपरवाइजर था बात कर सकते हैं ओके नाउ मेक मी अंडरस्टैंड दिस आई एम नॉट अंडरस्टैंड
Good morning, Farzan sir.
Yes, good morning. Can you give me access? I want to just share my presentation.
Yes, you. 1 second, sir. Okay, so I have to. Okay, I have made you host.
Okay.
Yeah.
198.
Oh.
Should we start in a minute or so, please?
Hello.
Yeah.
Yes, sir. We can start.
अरे काले लोग क्या चाहिए आपको?
Okay, and this admit button that is there, am I to admit the participants, or would you be doing that?
Sir, actually, I've made you the host, so only you can see. So if you can make me the host again, I will start getting it, and you stay the co-host.
Okay, one second. How do you do that?
Which is okay. Which is the policy says even if a customer opted the EMI on due date would get debited and the refunds will be processed accordingly. Okay, so that's
is that okay?
Perfect. ठीक है sir. Thank you.
Okay, should we start now?
Yes, sir.
Okay. Good morning, all. Can you just mute everyone, please? Yeah. Good morning, all. Welcome to the webinar of the SME toolkit for family businesses to really survive and thrive. Today, what we are seeing is we are in a really precarious time in which our businesses and the economy has been hit by COVID-19. It's a historical day on which we are having this webinar. For the first time in the history, the crude prices have gone negative. So, probably it's once in a lifetime thing when the price of crude of a commodity really goes negative. Yeah, am I audible? Am I audible?
Yes, you are audible.
Okay. No, I read a message saying that I cannot.
Yeah. No, you're very much audible.
Okay. So as I said, it's a historical day in which we are having this webinar for the first time ever. The crude prices, the future crude prices, have gone in really negative territory. In theory, a lot of us would always really say that a commodity technically cannot really go into negative because there is always some kind of cost as far as extraction of the commodity is concerned. The procurement of the commodity is concerned. But we are no doubt about in historical times very unprecedented territory, and in these turbulent times, a lot of things in terms of the financial markets, economies will happen around the world and are continue happening. So let us, to start with, let us just get a feel on what really is the COVID-19 and what are we hit with. Probably it's the biggest economic devastation in 80 years, the biggest pandemic in about 100 years, the greatest intervention by central banks, governments around the world, where they are trying to revive the economy. It has resulted in a worldwide recession. There's a lot of talk that whether we will get into recession or no. In my opinion, the worldwide economy is already in a recession. Millions of small enterprises have shut shop for last couple of weeks and continue to do so with uncertainty when they will resume, how they will resume, resulting in many jobs being lost. The whole issue has become one of survival of human life, survival of business, and really testing times as far as everyone is concerned. So a lot of us that are family business owners and small owners, there are two worries. One is in terms of health of survival, and second is in terms of continuity as far as business is concerned. So what we will try over the next hour and a half to do is basically run through that what we can really do as a small business. How do we survive this period? What should be done? How we can really look at it? And how do we look beyond COVID? That, after COVID, how do we really look at things? Let's look at it in the Indian context. We've been in a lockdown. For almost 50 days, almost 2 months is what we've been really in a lockdown. Let's go back a little. Before COVID really hit the Indian economy was not in the best of states. It was only in the month of December and January where some green shoots of growth was seen, and there was a lot of talk that is this the turning point, and would the Indian economy really revive after that? Post which really the COVID crisis has hit the economy, and almost the economy is at a standstill. At the start of it, in the month of December, January, when the crisis did hit China, the talk in India was that how will it hit really supply chains? That, a lot of consumption items and a lot of supply chain is on China dependent. Please be extremely clear today, almost 20% of the world GDP is contributed by China, and they play one of the most significant parts as far as the supply chain management around the world is concerned. Hence, it's a very significant economy. And in a connected world, if one large country like China really gets affected, its devastation as far as around the world is concerned. Probably in the month of January, India, including India, did not realize that this spread of virus would really happen around the world, and the problem, right from only a supply chain problem, would really become an existential problem, and which has happened really today. Liquidity was tight in the last. I'm talking about pre-COVID. I mean, we were looking at basically we were looking at a very tight situation just before COVID. A private sector bank had almost gone down, had been rescued by the one of the largest nationalized banks, and no large collateral damage had really happened. We had come out of the ILFS issues that had plagued the Indian economy. So liquidity on the whole for SME sector, for the SME companies, small companies, and companies was an issue. And when COVID really hit, it was the last nail in the coffin. There's a lot of talk around the world. There's a lot of talk really around the world in terms of what sort of stimulus that you really look at, in terms of reviving it, reviving the economy, reviving the businesses. So far in India, we've done a stimulus of approximately, give and take, about 1%. 1% is what, between 1 and 2% of GDP is what we've really looked at. There's a lot of talk that that's not really enough, because look at United States, US has done about 11% of GDP, Japan 20%, Singapore 15%. But please keep in mind that when we do this kind of stimulus, we do not have the ability to keep printing notes like the Federal Reserve's over and over again. Hence, it is extremely important that we bear in mind that when we are doing this kind of stimulus, we keep in mind in terms of the sovereign rating. Now, sovereign rating is really rating given in terms of the overall stability as far as the country is concerned, and the deficit figures are really, really concerned. Look at what has happened to South Africa. South Africa is one country where there is a warning in terms of the sovereign rating. So India is at the brink of investment grade. If we keep printing money over and over again, there's a very high likely chance that the Indian economy moves from the investment grade to the sub-investment grade. And when that happens, it's catastrophic as far as overall context is concerned, because a lot of funds, a lot of sovereign funds, a lot of investment that come into India will only come if it's in an investment grade category, because a lot of these funds have a mandate that they will only want to invest if it is investment grade. So there's a thin balance, there's a thin line that the government really has to take in terms of, amount of money, amount of stimulus it can keep giving, and to maintain the sovereign rating. Please bear in mind, how much ever the government does, it's not going to be enough, because there'll be some part of the economy always saying that, oh God, we were hit and it is not good enough. I think, in my opinion, it's not the prerogative of the government to bear losses. Each one of us in the sectors that we represent are going to bear losses. There's no doubt about it, because today we are really in a process of lockdown. The government is not going to really compensate for losses. So bear in mind that we have to look at the government context in the overall context of a developing country, with its constraints that it has, and in what way it can really look at helping the larger individual as such. There has been a lot of a lot of talk on the Indian economy. Look at the biggest thing is in terms of exchange rate. I think there would be about 4 to 5% depreciation. We've already seen the rupee move after this COVID-19 crisis really happen. There is a lot of talk of Reserve Bank of India coming and monetizing the deficits, that is directly buying what the Fed is doing. There is a lot of talk in which, what do you really look at in terms of employment? I think the key that we have to really look at is in terms of employment. Before the COVID crisis, we were at 24% unemployment. Unemployment rate was pretty high in India. Please remember, the biggest problem that the Indian economy will suffer in the going terms is educated unemployment. That is, a lot of people would be educated, and however, they would be, unemployed. In terms of the global outsourcing share, if you look at it, it's really at about 55%, and we are the third largest startup ecosystem. So within this context, what can really the government really do? A lot of talk has been that, in what way does this compare to the 2008 crisis? Because the 2008 crisis was another large crisis that really hit the financial markets. Please remember when the 2008 crisis happened, it was a crisis. It was a financial subprime crisis wherein banks were hit. So it was a relatively easier way to really rectify it. You rectify or sort out the top banks, and slowly you sort out the credit system and things would come in place. What you should really remember is two contexts. One, the question of life versus livelihood was not there in 2008. Today, people could really freely travel. There was no hit in terms of supply. There was no lockdown, or there were no restrictions imposed. But today, the situations of survival, today the situations of livelihood, and a lot of countries, or most of the countries, are in a state of lockdown. Also, please remember, go back to 2007. We were coming back from a very, very strong economy in terms of the Indian context. So it wouldn't really be fair to really compare the 2008 to the 2020 crisis, because one was a pure financial crisis in which you could fix the banks and things could get fixed. It was not an indigenous crisis that was really there. The spillover effect did come into India. There's no doubt about it. However, it was not something that really originated from India. Similarly, in case of COVID, today we are seeing a lockdown. We are really seeing a lockdown. Even if we assume that 3rd of May, the lockdown is relaxed, it wouldn't happen that the lockdown is really relaxed all of a sudden. So today, the GDP will be hit to a very large extent. Let's look at it. Every week contributes about 2% to GDP. And we are already 6 to 8 weeks that we already been in a lockdown. So we've already taken out a large portion as far as the GDP is concerned. Even when factories and industries start, it is not that, it's like a key that you really switch on and switch off. It would take time. Supply chains would really take time. Travel would take time. So things will be extremely slow. So a lot of it, most part of 2020 would probably be a period of survival, in which you survive your business. You manage to survive the period, make ends meet. And 2021 is really, you look at in terms of a growth trajectory or growth period. What will really happen? Now let's look at it, economic conditions post-COVID. Now the crisis in terms of the virus will go probably in 3 months or 6 months. I'm sure that this is the first time where people around the world are working on a single cause of making a vaccine or a cure for the virus, so that things can really pick up. So on an optimistic note, probably in 3 months, 6 months, or 9 months, today we will have come some kind of solution. So in terms of the economy opening up, in 9 to 12 months, there will be an opening as far as the economy is concerned. Please remember, the stock market moves on liquidity, not on economic fundamentals. What really happened last night, or what has happened today, is wherein the future price of crude has gone into negative. It is again completely liquidity driven. So a lot of us following the financial markets will say that on March 23rd, 24th, when the Indian market hit the lowest point, we've recovered almost about 15 to 16 to 20%. Well, that recovery is in place, but the fundamentals are really, there's nothing changed in terms of fundamentals, because you really look at the amount of money or liquidity that is really coming in. With the amount of money that is being printed around the world, a lot of money will move to the Indian markets, because emerging economies or emerging markets are an economy that are a market asset class that people would look at. And within the emerging economies, you put China out. Please remember, we were always competing in terms of either foreign investments, maybe foreign portfolio investments, that short-term investments, as well as FDI with China, because they were also considered the biggest rival for the emerging economies. With this anti-China rhetoric that's really happening around the world, a lot of money will move into India and continue to move into India. So a lot of times what could happen, the stock market is way ahead. So in stock market terms, we are looking at, you've already discounted as far as the Q3 and Q4 is concerned. So people are already talking of 2021 in the stock market. That fair enough, there is no recovery as far as Q3, Q4 is concerned. How fast will we really recover there? So at this juncture, just looking at the stock market may not give you a right gauge of how the overall economy is really performing. There's a lot of debate in how will we come out of it. Will we come out of it in a V-shaped recovery, a V-shaped recovery. We've fallen really fast because of the lockdown. Things are in a logjam, and we really come about fast, and things will recover probably in 3 to 4 months. That's a possibility. Another is a U-shaped recovery. A U-shape would really take time, in which today there would be permanent damage in terms of supply chains are concerned. There would be damage in terms of overall consumption is concerned. So we are looking at a relatively longer period. In a relatively longer period, we are looking at anywhere between about 6 to 9 months. And the worst of it would be an L-shaped recovery, wherein we say we would take about 12 to 15 months to really come out of it. So the best thing where governments and people look at it is, you really hope that you want a V-shaped recovery, but you really prepare for a L-shaped recovery. So in terms of preparation, prepare for a L-shaped, and you really look at as far as a V-shaped recovery is concerned. But please remember, all these theories are in place as far as normal economic conditions and recessions are concerned. Today we have a question of survival. So in my opinion, a VUL may not work. What could happen is probably a W-shaped scenario could happen, wherein what happens is the lockdown will open, things will come to normalcy, and we would see the spread of virus again, and we would end up in a lockdown again. So we could see this scenario of pattern open, close happening for the rest of the months, probably from June onwards, as far as India and other parts of the world is concerned. So we could have recovery and we could really go down. So it is very, till a clear cure is really found in terms of economic terms, it's going to be a question of how we really, how we really look at it. At the same time, let's be extremely clear, human beings are social animals. Okay, is it that we'll never go for an IPL match? Is it that we'll never go for a coffee shop, or we'll never go for a cinema hall? We'll never go to see a movie? The question is that we will never, it is when will we really go about it? How fast can we really go about it? Because there are certain things like a match or probably a movie hall where economics do not pertain social distancing. So it may not happen. We are blessed with a very large population. So in a country with 130 crore people, it's extremely difficult to really have a scenario wherein you have social distancing. So as you know, a lot of people say, social distancing could be a privilege of the rich nations. However, in a country like India, where population density is humongous, social distancing is a problem. Keeping that factor into mind, we will have to really determine that how recovery will take place, when recovery will take place. At the same time, what we've seen with the Chinese experience is there's a lot of revenge consumption that could take place. Revenge consumptions today, we are sitting at home for the last 4 to 6 weeks. So when things open up, partially when things open up, say probably a mall opens up or probably shops open up, so on and so forth, we would go and spend. We would go and spend a little more than we would go and spend normally. So that's another revenge consumption that could take place, that has been witnessed as far as the Chinese economy is concerned. So keeping this context in mind, we have to really shape the business for the next few months and the next few years. We cannot really say that this is going to be permanent. It's not that the lockdown is going to be permanent. Things will pick up. When things pick up, we should be in a business, in terms of a position in a business, that we make the best out, really, best out of it. Now let's put it in the context of SMEs or family businesses. Most family businesses would really come about in the categories of SMEs. So that's why I would collectively refer it as SMEs. SMEs play a very significant part in India and emerging economies. In India, if you look at the overall context, we have about 70 million SMEs. They contribute 30% to GDP, 40% of the working population works in these SMEs, and about 110 million people. So a lot of people really are associated as far as SME is concerned. A large part of these SMEs really come in the unorganized sector, where they function either in the parallel economy or they are completely unorganized. A lot has changed since demonetization really took place, and a lot of these unorganized players have really moved into the organized sector, but there's a long way to really go. In terms of survival, what is really seen is that most of the
NPS, say somebody has done an average.
If you look at it in terms of survival, most of these SMEs would really have cash only to survive for 2 weeks, and we have already been in a lockdown for 6 weeks. So big question is how many of these small businesses are going to open after really the lockdown goes about. So right now we are in a state of lockdown, so we really don't know the damage that has really happened to the economy. It is slowly when we open, hopefully probably in the first week of May and subsequently, is we'll really realize that how many of these SMEs have survived, how many of these jobs are going to come back, and so on and so forth. So as far as the government is also concerned, they need to play it very smart. They cannot give the complete stimulus as far as the government is concerned now. They will have to go about in phases. For a simple reason, you will have to really know. You really you'll have to really know that whether what is the damage what is the damage as far as the Indian economy on opening up is really concerned. The biggest pressure for this is going to be financial services. A lot of these small SMEs, because of the nature of it, used to take money from what is known as shadow banks or or NBFCs, non-banking financial companies, almost 30% of the total credit. Also with microfinance companies, because of the nature of being unorganized. Now, with this kind of pressure, with this kind of pressure that is really there, it really will not, it won't really work as far as the NBFCs are concerned, because the credit quality or asset quality will really, take a hit. So what do you really do in terms of family businesses? What would you really do? First thing, you will have to really, this is the time that you have to really understand your complete business model. Understand your supply chain. Understand your supply chain in detail. Reach out to your customers. Extremely important to reach out to your customers and explain to them that what you really have your plans in terms of survival, and also after COVID, how will you really look at it. Please remember, analyze your cash flow. There's micro analysis of your cash flow that is extremely important. There's a lot of credit that SME companies really give as far as payment terms are concerned. If you do not survive the period and you shut shop, you may not receive that money ever. However, if you look at it in terms of debtor days, as we put it in finance, we would put it say 0 to 30 days, 30 to 60, 60 to 90, 90 to 120, and so on and so forth. A lot of people that owe you money are going to extend the amount of time that they're going to pay you in. So be extremely clear as far as your cash flow is concerned. If you have to look at a state of recovery, please look at recovery. How are you going to go and work about it? How are you really going to talk to your clients? Because remember, as you are in a survival mode, so are other companies in the survival mode. There's no doubt about it. Cash is really king. If today at a promoter level or at the company level, if you really have cash with you in terms cash with you, that is in cash and cash bank balance, is extremely important. You can really utilize it well to get better payment terms, better client edge, and probably a lot of benefits in terms of acquisition opportunities as well. As far as capex is concerned, please be very clear. In this period of uncertainty, you will not really look at in terms of what capital expenditure you're going to look at, because you want to open up, assess how the damage is, what it is, and then look at it. So try and push your capex as much as possible. Okay, unless and until you are midpoint 80-90%, please do not really further as far as encourage in terms of capex really will happen. Next thing, in terms of please understand the policies given by RBI and the government to your sector. There'll be certain policy that will be given by the central bank, that is by RBI, in a generic term, wherein you would have a repayment holiday, you would probably have better repayment terms, you would probably you would have one-time construction of loans. Whatever is coming, a lot will keep coming in as time goes. Please analyze that very carefully. So there could be generic to the banking community on the whole. And second, it could be a very sector-specific push. Today, government may come up with a very sector-specific push that has policies for your sector. So please sit down and get a fathom of what really is important. Please remember, at these times, please look at cash flow rather than profitability. So there's been a lot of talk in terms of, capitalization, the first move that RBI did, where they said, we have given you a 3 months holiday in terms of repayment. So in financial terms, what you're really doing is you're capitalizing your interest. So a lot of people said that, what is the benefit that, I have to really end up paying more? Fair enough, valid point. But what have they given you is they've given you cash flow respite. So what they are looking at, what the government is looking at, is a survival mode. So should businesses look at a survival mode, that you should really survive today. Maybe you pay a little more later on when things are normal. So please look at cash flows very clearly rather than, profitability. Extremely important, communicate to your staff. A lot of small businesses will be having anywhere between 5 to 50 employees. Like, you have uncertainty on what the future is going to hold. Similarly, the people working for you today have a lot of uncertainty in which our salary is really going to come about. How is it going to really come about? What is it? And what is the plan of continuity? So be very, very clear. So the government has really requested that you go ahead and pay salaries and don't have any job cuts. But we've witnessed that in the last week to 10 days, a lot of companies, big and large, have come out really very openly and said either they're going to keep salaries on hold or reduce salaries. So that uncertainty that is really there should be really communicated. Look at credit in whatever form that is possible. Please remember, it will be extremely difficult. It will be extremely difficult as far as credit consumption in the near term is concerned. Getting new credit from banks or changing a bank at this moment may not be the right strategy, because today usually what would happen is, probably if your bank is giving you X exposure, today some other bank would want to really give you a better exposure and move a relationship. Those days may not really happen in the next 3 to 6 months. So please stick around with your banker, whatever possible financial institution that you are with, and see whatever maximum, return that you can really look at. Also, please remember, redraw your business plan. You will have to really go for cash flow. Please calculate your working capital cycle that is there. Is that your procurement to the amount of money you collect? You may have to look at a scenario wherein you look at slightly lower margins but better collection terms, because you have to survive that period. So be very clear today. That will be a case-to-case scenario. If you are a firm that has enough of cash and liquidity, you can work normally. But however, if you are a firm that is really been hit by this thing, please look at collections rather than margin. So that is something that you will really have to look at. Look at short-term funding. There is a lot of short-term funding that will come about in the system. RBI is really looking at pushing through the LTRO operations. They are really pushing credit to NBFCs are concerned. NBFCs will come out with customized structured debt solutions as far as various sectors are concerned. So be open to that. It could be a very customized solution for your sector. So look at those short term. The cost of those solutions will be slightly higher. You will not get it at bank rate, though you may say that, the RBI is reducing rate. Why is it that the credit from NBFCs is slightly higher? That will continue because they are really factoring in the credit risk that is associated with the period and with the sector. So be open. There will be a lot of structured debt solutions probably when things open up. So a lot of these larger, smaller, medium-sized NBFCs will give you solutions. So look at it in a way in which you take it for the time being, survive the period, and then really, go on. Be extremely clear, though 3rd May, even if things open up on 3rd May, it is not that you will really be able to function normally. Things will have to probably change in the way either you function, or it will really take time in terms of really opening up the complete economy is concerned. You may have to spend a little bit in terms of capital expenditure. If you are a factory, you're a manufacturing concern, in order to implement social distancing per se as such, maybe a bit about capex would be required. You'll have to really factor in terms of those expenses are concerned. You may have to change your business plan in terms of probably labor is concerned, procurement is concerned, so on and so forth. A lot of procurement may move to micro territories, because if inter-district movement is going to be restricted even in the future. As I said, there is a very high possibility we open up on 3rd of May. The government assesses how the situation is, and then probably after a month or 15 days says that, listen, this is really not working, let's shut down again. So this on-off could keep taking place over this period of 2020, and inter-district movement would be difficult. So though you would have the supply chains coming from all over India, maybe a lot of disruption in terms of your manufacturing may happen if it's not from the micro market. So you will have to probably really look at it. Again, as I said, cash is king. A lot of acquisition opportunities can come in as far as your businesses are concerned. Acquisition in terms of clients, the first, because clients will really want better payment terms. Yesterday, one of the largest paint manufacturers, without giving names, one of the largest paint manufacturers in India have communicated to all its vendors that we are not going to pay you in 30 days. We want a payment cycle of 60 to 90 days. So a lot of these small SMEs that are supplying to this paint manufacturer, some of them may be out of business, saying that, listen, we don't have the capacity to hold. But the people who have cash will really be able to take advantage of this opportunity and capture market share. So if you have cash, you can probably take a lot of market share. Similarly, a lot of these smaller players that can't survive, they'll be up for acquisitions, they'll be up for sale. So be extremely open within your domain that, if there are certain opportunities in terms of, acquisitions, they will come about. Valuations will really be lower, much lower than what they were a few months back or a few years back. So take advantage if you really can look at it. Renegotiate in terms of your all your commercial contracts, especially if you have a lease, if you really have, you have godowns, you have offices, etc., renegotiate it. But be very careful. Please do not overdo it, because what really happens is, again, as a survival of the fittest, this period is the survival of the fittest period. So it could happen that, because there's so much negativity at this juncture, you may say that, I don't want this office, or I don't want this showroom, and you end up negotiating with the owner. Owner says no, and gives it to someone else, and you miss that location or you miss that opportunity. So be very careful when you're doing it. There's a thin line between negotiating and really, closing down business, which will have a large real impact. So, the problem is a lot of these showrooms, or if a lot of you all have retail presence in terms of, showrooms and retail spaces, it could so happen that most of these transactions are done through lease rent discounting, when you take funding from the banks. But please remember, banks are aware of the problem that's really happening. Okay, banks are aware of shopping malls, cinema theaters, so on and so forth, the problem that they are really facing. So because the problem is too plenty to most of their customers, there's a problem, solutions will come about. So at this juncture, be open to solutions, keep an eye open what it is, do not really panic, and look at how things really shape up. Look for funding from many sources. A lot of people will look at acquisition opportunity, the funding opportunities for small businesses. I know a couple of people who said that, listen, stock market is something that we don't want to really look at, but we want to invest into small businesses that give us cash flow. So maybe from people, people from your town, people from your city that want to associate with you, they may want to associate in one form or another. So be open to that. Be open to getting onto the concept of really getting into partnerships for survival. And you really have to be ready as far as the next, phase is really concerned. As I always keep saying, only if you survive, you will thrive. I mean, the whole idea is survive 2020, make ends meet, survive 2020, and only then will you be able to thrive in 2020, 21, 22. Please remember, India is the consumption capital of the world. Consumption is going to come about. Growth is going to come about. We are a favored destination as far as capital is concerned. One of the risks, other than COVID, post-COVID, one of the risks that could really happen is this whole thing that is happening in terms of the boycotting China is concerned. Like the Indian government has already put out one advisory in which that FDI rules as far as neighboring countries is concerned. But please remember, it's hard. It's hard to really eliminate a country which contributes almost 20% of world GDP. So you have to bear in mind that even though COVID may come, a vaccine may come, however fast it comes, we really hope it comes at the earliest. But due to this backlash, to avoid China, there could be a lot of economic repercussions as far as the overall context is concerned. So a lot of opportunities could come India's way if taken in the right spirit. You will have to really be there to take the maximum advantage to it. Look at the positive side of it. Even pre-COVID, $17 trillion really was invested in negative interest rates. So in simple terms, negative interest rate is where you pay the bank to hold your money. And look at India. India is the consumption capital today. We are going to increase in terms of manufacturing, services sector, so on and so forth is concerned. And we are very much there in terms of the opportunities as far as the world map is concerned in terms of developing nations. So capital will flow in coming times. You will really have to look at it, and things will really move. So that positive should always be kept in mind. One extremely important thing for family businesses is adoption of technology. A lot of businesses today have been third, fourth, fifth generation businesses. They're doing fantastic. They're doing really well. They've been really profitable. And a lot of technology is not really moved into business because a lot of generations above have been saying that, listen, we've done it right so far. So why move away from it? Why evolve technology? However, what has happened today is a great opportunity to really adopt technology in whatever form of business, whatever form of business you are in. Like yesterday, I was talking to a client of mine. He's into the real estate business. So the son had just joined the business about 5-7 years back, and he always wanted to make walkthroughs as far as the flat and businesses are concerned. Now, to make a walkthrough, you have some kind of marketing spend, so on and so forth. However, it was always said that, why do you need this? My flats are always sold. Why do we implement all of this? But because of COVID, nothing has happened in the 6 weeks. And because he could make a walkthrough, a couple of flats could be sold. So look at that opportunity there. So adoption of technology would be on a permanent basis. Things would really be adopted in terms of technology in whatever form and sector that you belong to. So that should be really looked at. How will you supplement technology to your business? Be very clear, demand will slowly pick up. Okay, a lot of economists will say that V-shaped recovery will take place, so on and so forth. But today demand will slowly pick up. It's not going to happen that probably in the first week of May when we open up, it's going to be all bang. Everything is going to happen. Things will move in a little slowly. So keep that in mind. So it could really happen that you have probably even after opening up, the first quarter could be extremely slow. And then you could see probably recovery really taking place. The biggest risk factor being that the second phase of the virus doesn't come back. Hopefully it is not really witnessed in terms of China. We do not really know how authentic data comes out from there. But however, it's extremely important that the second wave risk is not there. If there is a second wave risk, I mean, then things will get worse. But let's hope for the best rather than really the worst. Be very clear that these are unprecedented times. Today, things can happen that your businesses have really been hit. If you are in a sector that's not going to come back probably in the 3 to 6 to 9 months, like for example, tourism, hospitality and tourism could be worst hit. If you have to really look at an exit plan, that if you feel that it's better to exit the business now and then relook at it probably when things normalize, it's fine. Please look at it in a very legal and proper way. Do not take knee-jerk reactions. Okay, have a proper exit strategy. That if you're going to exit the business, how it's going to be. Like I know someone who has a great fine dine restaurant in Mumbai. They are looking at exiting the business because they said that it's not going to come back in the next 6 to 9 months. Even if it does really come back, we will not be able to maintain the social distancing, and overall the model will not work. So in that case, please really look at a legal recourse. What are your legal recourse? What are your legal repercussions? And then you really go on in terms of exit. But the most important, you change your business plan. There's a time where you will have to really change your business plan. You may have to change the sector in which you operate. You may have to diversify. You may have to really stick around there. But most important is these are unprecedented times. This happens once in 100 years. Hopefully will not happen again. Okay. And if we survive this period, I think we are going to really survive and thrive. So I think do not lose hope. And you are in the right country. You are in the right setup. And things will really happen. So I think, things will go on, and you should really survive that period, Thank you so much, guys. Thank you. Any questions, please, if you all can.
Guys, anybody wants to ask something to sir, you can just unmute, talk, and then mute yourself again.
Sir, I have a question, sir.
Yes, who's this?
I am Manoj Moore, sir, FMB4.
Okay, yes, Manoj, please tell me.
Sir, my question is, like, we are into marketing of our various products in Odisha. Now the market being closed means how do we market our products to all the industries when I sitting in the office? Is it possible, sir?
So there will be a temporary blip, and there is a temporary problem as far as the activity is concerned, because one, even your customers are not functioning. Most of your customers, I'm sure, are not functioning. So what you will have to really look at is adoption of technology. See what you can do in terms of adoption of technology if they are open to it. Survive this period of the lockdown, because they are going to open. You know, I don't know what's the situation in Orissa, that when are they going to open. I don't have first-hand information on it. But hopefully, if they open in the first week of May, things are going to pick up. So you will have to really look at it that from first week or second week of May, how do you really start selling, and how do you make up for the lost period? That is what you'll have to look at, Manoj.
Thank you, sir. Thank you.
Thanks, Manoj.
Okay, I'm going to take up this question from Amit Jain.
Sure.
First of all, Farzan, thank you very much for this neat roundup. As economists are wont, we can have two people disagreeing with some of the things that have been stated,
Right.
but we will just take some of these questions up. So Amit has a question here. Why printing money will impact our investment grade, and why this is not a risk with the US? Why is US's rating better? Why does inflation go up when a country starts printing money? And if US prints uncontrolled money, should it now depreciate the USD?
Okay,
Farzan, you can take a shot at it, and I would, given the fact that, you know, this is my own, down my alley.
No, please, ma'am, why don't you go first? Why don't you go first? Then I would. Please go first.
So this is for all of you. The first question, which is why printing money will impact our investment grade and why this is not a risk with the US. I just want all of you to understand this, that, you know, what is the meaning of an investment grade? You're looking at three credit rating agencies, basically Fitch, you have Standard and Poor's, and you have Moody's, which basically rate the government bonds of any particular country, right? Now, our bonds, the government bonds, mind you, have been rated as BBB minus even as long back as in 2016.
Oh.
All right? 2016, when we were the world's fastest growing economy, India's government bonds were rated as BBB minus. And there are two factors which credit rating agencies normally look at. Those two factors are basically the government's fiscal deficit, and the second is the inflation compared to all the peer economies. And I'm going to come back to how does this affect you, right? So when I'm looking at India's government bonds, which are basically the 10-year government securities, if you say that India's government securities are BBB minus, it basically means that the world does not have enough confidence in Indian government bonds, and therefore the Indian government would have to pay far more interest rates than, say, a US government in order to borrow money. How does this boil down to you? Because when the government, which is almost like it's called the sovereign bond, which basically means that it is the highest credit rating that any country would give its bonds. If the government bonds themselves are BBB minus, then it means that the private sector will have to pay far more interest rates in order to borrow, okay, from the international markets. Now, so that's the first part of it. Now, the point is, if you're printing more money, you basically, it's a simple demand supply kind of a situation. If you have supply more than the demand, what will happen to the price? The price goes down, right? And in the same manner, if you have more of supply of money, and if the government is resorting to more and more fiscal deficit, it means that the government bonds are going to become more and more into the junk status, which then will mean that the interest rates at which you will be able to borrow from the world markets will be far greater, right? So why is the US's rating better? Because whether you like it or not, the dollar is the international currency, right? It's the international reserve currency, especially when you have these kind of difficult times. People run towards the currency which appears to be the least risky, and that, unfortunately for all of us, is the US dollar, right? So that takes care of your first question. Why does inflation go up when a country starts printing money? It's very simple, no? That when you print more money, you have more money in the hands than what you can buy. So if the supply of goods and services is lesser, that's how it works. And what's the third question? If US prints uncontrolled money, should it now depreciate the USD? The depreciation of the USD is not likely to happen. As I told you, the depreciation will depend on whether or not the demand for the US currency goes down. And if the US currency continues to be the preferred currency, it will not depreciate. Okay, Saurabh is asking a question. Does it take care of Amit? Is that okay? Okay. Do you see major policy changes from Indian government in order to grab the opportunities coming from the companies that move out of China? Farzan.
Yes, I think the traction has already happened. I think the seeds were already sown a year or so back. I mean, we were looking at taking a large part of the supply chain from China. So the efforts will be made. But as I said, right now, probably the effort will be made in terms of survival mode, in terms of health. Once that is in place, I think a lot of investment avenues will open up in terms of the Indian government is concerned, because they realize that this is a once in a lifetime opportunity wherein a lot of supply chain may want to move to India. So I think things would really act fast, and things would really move. So a lot of people into the manufacturing sector, services sector, this could be a lifetime opportunity, because things will really look at moving in terms of supply chains moving to India. But please remember, things are not going to come about overnight. Be very clear on that as well. It's not that in the next 3 months, 6 months you would really see the things moving. Because infrastructure is a real problem as far as India is concerned compared to China. For some of you all who've had the opportunity of traveling to China would realize the kind of infrastructure that really they've set in. So in the long term, yes, the things will move, but it will move with a slow and steady pace, in my opinion.
Okay, Kardam has a question. Will new term loans from banks be tough for new projects?
Yes, extremely tough as far as new projects are concerned. So let me add two parts to it. If you are a company that is probably taken money from a venture capital, private equity, or in that case, even a lot of these private equity venture capital people have really looked at this scenario in supporting their portfolio companies for survival rather than making new investments. Similarly, as far as banks are concerned, the biggest concern for banks will be they do not want the good companies or good assets to turn bad at this juncture. So there will be a lot of support to the existing clients. But as far as new projects are concerned, credit will be difficult. Credit will be difficult, at least in the immediate term. But over a period of time, I think things should open up a little. But it would be difficult to get, if it would be difficult to really go about and get more credit.
Okay. Mihir has a question. He's in the high fashion business. What is your view on the upcoming months or the year as far as the high fashion business is concerned?
Good question, Mihir. I mean, in my limited understanding of your domain is, I think people will buy high fashion items and goods if people get the opportunity of socializing and going out. So we really don't know how things are going to open up in 2020. Maybe a lot of, these bigger events may not take place. So also because you are at the higher end in terms of the, value chain is concerned, I feel a hit on the business will be in place to a far larger degree than it was before.
So if I may add to that, Farzan, the high fashion business is an absolute discretionary spend. So probably what we might want to advise you, Mihir, is to look at more of these, what do you call these, trunk events?
Yeah, correct.
Yeah. So rather than try and sell it through a mall and so on, where social distancing is going to be the norm, I think it would be better. See, this goes for each one of you. Rather than, and this is my private opinion, of course, each one of us has their own way in which we would want to look at it. But my suggestion would be that do not look at closing down your business so fast. Absolutely. Think of what are the other kinds of business models and think as innovative as you can, right? So you would have a list of your client base if you're into the high fashion business. what are the ways and means in which you can continue the very same business, and in fact go in and ask for a premium on the fact that you're continuing to operate during these times. Okay, so that's what I would suggest, and that would require anything from these kind of trunk events to, you know, doing probably a private display in each one of these high net worth individual houses that you could think of, rather than selling it through a conventional mall.
True.
All right, Ketan, more often than not, the collection of payments is not driven by us, but by market trends. How can we change that? What measures can we take to improve collections for better cash flow?
I think, as I said, Ketan, cash flow is going to be difficult for you and for the people that are really, that are going to, you supply to. So it's going to be a challenge. The question is, how do you balance the thing of in terms of, recovering your cash flow and continuity of business? So there's no simple formula to really look at it in terms of, what can really be done. But however, keep in mind that continuity of business with optimal cash flow is what we will have to look at. You're absolutely correct. As I gave an example of that paint manufacturer, what do you really do? If you're a SME that's supplying to that, and the paint manufacturer says, 30 days, I'll pay you in 60 days. Now, you either supply to me or don't supply to me. That's a call you will have to really take. So it is going to be difficult. It is driven by market trends, but within that market trends, try to be on, the least affected within the market trends. It's not that, some people are going to have fantastic collections and some people are going to have really bad collections. I think this, bad collection and bad debts is going to come about in the next 6 months to 1 year. But be on that thing where, the least amount of bad debts is that you can look at. I feel that's what you can really do.
I would also want to hazard a guess that in this kind of a scenario, what would really work towards a turnaround is where you kind of eliminate cash completely and look at more of barter exchanges of a certain sort.
True.
So that could probably be the kind of trigger which would be required for turning around the economy. Because if it's going to be purely cash driven and each one of you would want, the cash before supplying something, I think it's going to be a difficult situation.
Just to add to that, I know a couple of real estate people that are going to probably open up, they are in districts where things will open up probably in this week or next. They are looking at a barter system already. They are talking to their cement suppliers. They are talking to their RCC suppliers that, listen, you're going to supply me goods worth X. Why don't you do one thing? I don't really have the money to give you, but I will give you a property. I'll give you a flat or office that I'm making in lieu of that. So these barters have already started initiating in real estate, and you should look at it in your industry as well.
Yeah. Okay. Now, the other question is from Ronak. If the international markets do not open, even if India does, what will be the status of the economy then? Ronak, there is a piece in the Mint that I have written on 16th, and we can probably share that with you. The problem with many of the reports is that they're looking just at the domestic economy, and they're forgetting that India's openness indicator is one of the relatively higher ones. In fact, we are as open as, say, China is, and in fact, more open than, say, the US is, both in terms of the dependence on the rest of the world for our goods, services, and also for capital flows, right? So Professor Farzan had mentioned the fact that we are the preferred destination and so on. So we are looking at a very, very high dependence on the global economy. And all these reports, if you look at the Barclays report, which actually predicted a slow growth rate, that was a report which I have written about, and where I'm saying that you're not even looking at the impact of the global economy. So it's like this. Let me explain this to you very simply. If you're a farmer, and if you have decided that I'm going to try and use all the pesticides, all the fertilizers, all the irrigation that is available as part of a green revolution, and I'm going to have high productivity, it will work up to a point. Because if your neighbor farmer is a poor farmer and he has not invested in those pesticides are going to come and affect your farm. Okay, so if the rest of the world is not really going to be up to whatever is happening, and if it is not going to try and introduce the same kind of measures, and if there is no international cooperation, you will find that India-centric domestic policies alone will not work. Okay, Yash Ladha, if suppose a plant is in the red zone and the lockdown for the red zone is extended beyond 3rd May and our competitors are in the green zone, how should we go about it? Very nice question. Yash.
Yes, to be honest, it's a very good question. Today, what you could really look at is two things. One, in terms of even the red zone, like a lot of Maharashtra is in the red zone, which includes Bombay and Mumbai and Pune. So at least the industrial MIDC that we have issued policies in which certain factories can be started, which is outside the city limits. So even in the red zone, certain relaxations will happen, and you have to really comply with those to really start your factory. At the same time, if your competitor is in the green zone, what you really need to look at is your nature of your goods. Today, supply chain across states or across cities will be extremely difficult. So if today your manufacturing unit is something that can do well within within the district or within probably that specific state, it's much better. But today, if you are in a business that has to be where it has to be supplied across destination, across states, it would be a real challenge. So these things of red zone and green zone will have a blip in terms of initial starting off. But remember one thing, over a period of time, normalcy will come in. So maybe you get affected to start with, but over a period, I think that can be compensated with. But a lot of things in terms of factories are concerned, in terms of you'll have to look at a lot of design changes, because today social distancing in factories has never been there in India. So today, when you really look at it in terms of when the worker is entering, how do you really sanitize him? How do you let him inside the factory? So a lot of that has to be implemented. So whether you're in the green zone or the red zone, you will have to put those practices in place. So A, start thinking on those practices, what it is. B, look at what your local, like we have a MIDC, whichever state you belong to will have a industrial development corporation. What are those guidelines? And start preparing for those guidelines over this period.
Okay. Okay, one moment, please. So we have from Aditya Jajaria, we are the distributors of Tata Steel and are already holding 1.5 months of inventory, but the company will try and send us the orders placed and are left for January, February and March. So what should be our reply to them?
So Aditya, to answer your question, I don't know about Tata Steel, but let me give you the analogy that's happening in the auto industry. A lot of these auto dealerships that are really there, they have inventory anywhere between 1.5 to about 2 months. So whether it is 2-wheelers or whether it is 4-wheelers. So what has really happened is, this push in terms of these OEMs to really giving them inventory every month, that has really stopped. Okay, that has really stopped. So if in your case it is Tata Steel, you'll have to really communicate to them very clearly through your dealers association or association that you really have, all India or your state association, that what the situation in your state or district is, and whether you can take this kind of new inventory or you will not be able to take new inventory. Also, you will have to look at it. I don't know the nature of your inventory, whether this can be held for a very long period of time. It cannot be held for a long period of time. Like the auto industry had a very unique problem. Like the Honorable Supreme Court said that, no selling of BS4 vehicles after 1st of April. So that was a big problem, because in shutdown, most of the auto dealerships were shut down from 21st of March. So they were left with a lot of BS4 stock which they couldn't sell to the normal public. So, but solutions have come from OEMs, whether one way or another. So I think it is best to reach out to Tata Steel and seek a solution with them.
And I would also like to add there, Aditya, that, one is communication. Get them to kind of postpone some of these things. And in the unlikely event of them not agreeing to it, I'm sure there would be legal recourse through a force majeure kind of a thing. But that would require an expert opinion. But I think that should be possible, right? Okay, Akshay, for a business that has niche products that is not going to come under essentials or even as primary requirement, what would be the scope for businesses like that? How is reviving the market going to be like?
So Akshay, very, very, very good point. I mean, there has been a lot of talk, especially as far as the Pune market is concerned, where a lot of IT companies are there, and now they've said that, work from home. So a lot of IT employees have come back and said that, listen, our router, probably a laptop and probably hardware is something that comes under essential services, because without which we will not be able to function. So this definition of essential service will keep refining. will keep changing probably on a daily, weekly basis as and when things really open up. But the first thing, as the government understands, is it's your day-to-day requirement and medical, which is essential. Post which they'll keep adding things as far as essentials are concerned. So as the situation improves in your zone, you will see more and more things added to that list over a period of time. That's the way it will really move.
Okay, from Bharat, opinion on the likely impact on inflation of this lockdown, since demand will not surface for a while and the production will start.
You want to take that, madam? Do you want to?
So, look, when you're looking at inflation, if you have in mind the CPI, then you can very well see straight away that the food is one particular item which is going to go through an increase, right? Your oil prices have gone down dramatically. So all in all, I would think that the likely impact from the production point of view as far as inflation is concerned on you should be positive as producers, right? As consumers, I would think that it would be a difficult kind of scenario, but as a producer, I think you don't need to worry about that for a while. Okay, from Rakshit, Indian government is about to roll out a fiscal stimulus for the SMEs. Will we be able to take advantage of this package even if we are not registered under the SMEs at the moment?
Doubtful.
Doubtful.
Yeah, doubtful. I think, Rakshit, you'll have to really, they will only look at two criteria here. One, probably, as I said, Rakshit, the problem is so large, everyone is affected, okay? Large businesses, small businesses, everyone is affected. So first thing, as far as SMEs are concerned, they would look at registered SMEs. The government may even fine-comb the definition saying that, let us look at profitable SMEs. Let us look at SMEs which have been paying taxes to us over a period of time. So, for you to really not qualify as an SME and get the benefit would be extremely doubtful.
Okay, Vishal has this very interesting question. Okay, in a post-COVID world order, do you think WTO will have its influence that it has now on international trade? And if no, can India leverage the situation? I'm afraid, sorry, Farzan, I'll just one point and then I'll give it to you. Yeah. The WTO, I think, in any case, has become a toothless kind of tiger in the recent years. And it has been increasingly replaced by bilateral trade negotiations. I think that's going to be the order of the day. Farzan?
I think another thing, please keep in mind, is this against China rhetoric is really going to really get louder and louder as we get closer and closer to November, December, because we are heading into the US election. And that will be a very important factor to decide the US election. As far as WTO is concerned, as Madam said, it's already as good as redundant. So, that really is not the thing. But what will happen, this anti-China thing will get louder for sure. It's very easy to say that, India or someone else will really benefit from it. But world over, this is not a very positive thing in terms of supply chains to really happen at such a fast pace.
Okay, Gaurav, our business model is to buy in bulk and distribute on credit, long credit terms. Now both imports and credit have taken a hit. How to keep things moving now? We are into the import and distribution of polymers and petrochemicals. Crude hit is another pain point.
Yeah. So, Gaurav, I think crude hit is two things to it. One, what really happened last night? Let's understand the future price has gone negative. Yes. Okay, the future price of May has gone negative. But if you really want to see the actual price of crude, you should really look at the futures of June and July, which were trading at $23 to $27. So I think, yes, crude has gone down, but, this negative thing was more of a, I think a crude ETF really acting up, and it went into negative zone. As far as you're concerned, it would be very difficult because one, in terms of exchange rate the rupee is going to continue to depreciate. RBI will keep intervening to whatever possible extent it can. But that will be one issue. And this whole thing of, in terms of, import and distribution at this juncture, how fast will it open up? How will it open up? There are a lot of questions to it. So I think you will have to really relook at the business model in terms of overall scenario and also overall, credit cycles that you can offer to your clients.
Ravish Gupta has a question. What about infra? Will there be a lot of stress by the government on it?
Ravish, as far as infra is concerned, if you are in the infra thing, you're in a good space. You have to just survive this period of 3 to 6 months. please remember, we need jobs. As I said, job creation will be the most important thing. And the way in which government can really push job creation is to give a push on infrastructure. It will really give a very, very high push as far as infrastructure, keeping in mind the fiscal deficit is concerned. So I think infra, you're going to be in a good space in terms of, in the coming couple of years is concerned. I think 2020 will be challenging, but I think after that, that push for infra will continue. At the same time, there is a lot of pressure from the public, from the Indian citizen and world over, that moves the supply chain from China to India, for which you will need fabulous infrastructure. So that push will come irrespective of whichever government it is. I think that's a space that will do well in the coming years.
I think the government is also going to start looking at buying some oil, according to me, and trying to stock up on the reserves of oil. So that's going to be a positive move. Okay, Sanchit has a question. What are the best sectors to diversify our businesses into in the current situation?
I mean, look, I mean, in terms of, do not diversify for the sake of diversification. Look at what the scenario is. This pharma thing is a little overdone. Like if you even see the listed stock market, I mean, pharma shares have 40 and 50%. Listen, it's not that the case that because COVID is around, I'm going to start consuming 2 times more medicines. It's not going to happen. Okay. So a lot of it is, yes, I will probably slightly increase I'll try to stay healthier. I'll try to stay better, but it doesn't mean that there's going to be extra push. So, you could look at healthcare. You could look at various sectors. I think let's put it this way. Do not look at negative sectors. Like, do not look at hospitality. Do not look at tourism. Do not look at retail, because these sectors are sectors that will be the last to take off, that kind of thing. Like, the largest cinema chain in India, the chairman was very clear that, listen, we are going to be the last people who are going to take off as far as cinema hall is concerned. Because let's take an assumption, even on 3rd of May, if things open up in your respective cities, I don't think so you're going to be comfortable taking you and your family to a cinema hall where someone coughs or sneezes and you're sitting in that same hall. So it's going to be difficult. So don't diversify for the sake of it. If you get a great opportunity, look at it, in terms of, diversification.
Yeah, so, all right. I think that's very sensible advice. And what I would also suggest to all of you is that within your own sectors, as I said, you will have to look at other kinds of models. So the discretionary good items are things which will not really take off immediately, but the real estate, I'm not as pessimistic about real estate as some of the newspaper reports have been stating. Okay, the one point that I wanted to make is, yes, when you're looking at diversification or even running your existing businesses, the important point is for you to get realistic about how do you look at margins. What was it that you were earning earlier? What is it that is likely to be the new norm now? I think that is what the expectation is what has to change. Okay, I'm taking the other question.
I'll just interrupt on the real estate bit. Even my take is, I think this negativity on real estate is a little overdone. For 2 reasons. I think, this work from home, people are saying that, look, listen, 25% people are going to work from home. It's not going to happen for 2 reasons. One, we do not really have that kind of infrastructure set up as far as home is concerned. A lot of people are struggling even today with bandwidth. Okay, so that's the first thing. Second is space is a problem. If you look at a place like Mumbai, if you're staying in a joint family, really working from home and having that kind of space is a problem. So this work from home is a little overdone, and I don't think so it's going to make that much of an impact as far as real estate is concerned. Yes, it will go a little slow, but I don't think so. Even my opinion, it's not going to be that badly hit.
Okay. What about footwear retail? What do you think will be the future of this sector in the coming year? Pinakin Thakkar.
I think what you could look at is just change the model of selling the footwear. I mean, you may not really have a shop in which people are coming in and really, really buying it. You will have to really look at the technology and the e-commerce way of selling it, and supplement yourself with the gig economy to move it across. I think it's not that people are not going to buy footwear. They are going to buy footwear. The consumption will keep increasing in India, but only you'll have to probably tweak the way in which you sell rather than tweak your industry, in my opinion.
We are in a hotel business. Since travel and hospitality industry is the worst hit and will be the slowest to recover, is it a good idea to approach a hospital chain or a brand and convert it into a hospital, keeping in mind that there is no recession in the healthcare sector at present?
Okay, so Ankit, 2 things to it. One, as I said, please do not have knee-jerk reactions. Okay, please remember that when you say hospitals, it's a very different business to be in. If it's a very complex business to be in, unlike hospitality. So unless and until you really have that skill set of healthcare sector, it's an extremely difficult business. If you look at hospitals and hospital chains around India, a lot of them are loss-making and not doing well. So it's not to say that that sector will just keep blooming as far as booming as far as the near future is really concerned. As far as hotels are concerned, you'll have to really wait and watch. Okay, you'll have to really wait and watch how things will happen. What are the norms that come in world over and India in terms of social distancing? I think people will travel. I mean, we are social animals and we will get on to travel. Now, how are these norms? What it is? You may have to tweak the way in which it is there for 3, 6, 9 months. But do not jump into a sector where you don't have real expertise. Unless and until you have that expertise, please don't look at in terms of hospitals, because as I said, pharma hospitals at this juncture, all of a sudden is a little overdone. But don't jump into it.
Okay, Aditya, would hiring a product consultant help with the opportunity to provide newer products to the Indian market for manufacturing?
I think absolutely. I think this is an opportunity to really look at tweaking manufacturing practices and getting best knowledge and best practices. So whether it's a consultant or whether it's an employee, I think you should really be open to the idea of change and really the idea of really adopting. Like I know a couple of units within MIDC that have taken consultants in place that listen, even when we start, please advise us what it is. So I think you will have to look at some kind of scenario of expert help in that regard.
Okay, Emmanuel has a very interesting question. Will gold jewelry business be considered luxury product or a wise investment as compared to other options available in the market? I just want to make one point before Farzan, you take this over.
Sure.
On a lighter note, I've been posting this on my Facebook page that, unless and until jewelry manufacturers are going to start making probably gold and silver masks, we are not going to see a revival of the jewelry as a discretionary spend for some time is out. Okay, because if you look at multiple people, I mean, and if you're following the social media, people are basically now understanding the comfort kind of products, okay? Basically homeware and lounging in your home clothes and so on. So jewelry at this point of time may not be the right kind of thing to focus on, but yes, as an investment option, I think gold continues to be a premium quality investment option. Farzan, your take on that?
I will break it up into two parts as you did, ma'am. I think gold as an asset class is fantastic to have an asset investing into gold, because I think way the dollars have been is really been printed in the US. I think as an asset class, it's a class to reckon with. But as far as jewelry is concerned, yes, it will take a backseat. At the same time, please understand your business model, how you're going to really sell this jewelry. If you have a very large setup, very large retail showroom, I think that's going to be the problem. I mean, so you will have to really, one, as a jewelry business as such will take hit, plus as a retail, outlet, you will have additional problems. So you will have to really relook at it. So if you are a jeweler, you will have to probably look at, making money in gold as an asset class rather than, selling of jewelry. That is something that you have to do.
Right. Okay, so Kuzai very thankfully or very helpfully has shared the link of that article. You can read that. Saurabh, we will share those links with you, sure. Amit asks, what in your opinion can be expected from the Indian government and the RBI? More of Keynes' approach or more of Hayek's approach, as I think it would give a lot of direction. Okay, see, I think considering that the lowest financial stimulus has been given in India in these times. Okay, so I am going to disagree a little bit with what Farzan said in terms of the printing of the currency notes not being an option. Okay, because, and that the only probably central bank which could do that is the Fed. We might see some kind of a return to the monetization of the fiscal deficit in the coming months. Okay, what do you mean by that? Basically, in 2003, there was an act called the FRBM, which basically wherein the government said that, all right, we are going to be people who will have some kind of self-control. And earlier, suppose say there was a gap between the government's revenue and the government's expenditure. it would simply go out and sell some governments, and I'm putting this very loosely for the sake of people who would not want to understand jargon. So the government would basically print government securities, go and give it to the RBI, which would in turn give it notes, right? So essentially you're putting more and more currency, you're monetizing the deficit. Now that sort of a thing was put to an end in 2003 when the government decided, took it upon itself that it is going to practice fiscal conservatism. Now that is something which is being challenged today, where people are saying that, look, maybe for a little point of time, we will need to do this kind of a monetizing of the fiscal deficit. We may still see that happening. And as I see it, a fiscal deficit at this point of time is not a problem, because we will need to have some kind of extra help, extra support. Every government in the world is doing it. There's no reason why the Indian government would not do it. As I see it, the government and the RBI is going to be looking at some kind of a concerted approach towards handling this whole COVID problem. But I would also say that this would not just be dependent on the government and the RBI. There would have to be international cooperation on this.
Absolutely.
Right? Okay. So I'm all for fiscal deficits. Okay, despite the fact that it might mean a junk bond status or whatever, because it's all going to be relative. And as I said, even in the past, when we had a 7.6% growth rate, we still had a BBB minus, which then got upgraded to BBB, which is what is our current scenario. Okay, Vipin, to everyone, income tax authorities target is about 35% for this fiscal year, considering 2 to 3 months down the flush already due to COVID-19. What's your view on how tax authorities would be achieving it? Are we gonna see pressures of assessments to achieve such targets, 35% up from the previous year?
No, Vipin, I think that wouldn't happen, because probably the government is going to realize that. And now I think it's going to be a more congenial approach to things. So things will ease out even in terms of income tax targets are concerned. So I don't see a real issue there.
So we have about 20 messages. I'll have to go fast on this. Amit, your pharma, manufacturing, healthcare spend, I think, has been taken care of.
Yes.
Not to read too much into this, but I think pharma is a sector which is going to stay more than anything else for the psychological reasons. Will FMCG production and movement barriers on an interstate level continue for the coming months? We are B2B manufacturers. There has been ambiguity from both states and UT regarding production and logistics so far. Our products come under essentials. I don't think so. Yeah.
So if it comes under essentials, I don't think so there would be a problem. Probably that even if there are problems, it is just temporary and it would really happen. I think it's all depending on how the curve will really go down. As soon as you have a situation in which, the number of cases are coming down, I think relaxations will come in quick and fast.
Okay, Abhijit, there's a question. We are into distribution of stationery and F&B products across Bengal and Jharkhand. How will the supply chain change in the following sectors, and what would be the future of Bangladesh exports? I just want to make one point, Farzan, and then give it to you. I think what you need to learn from Bangladesh as far as the exports are concerned is, despite all the negativity associated with its human resources and so on, Bangladesh has been able to create this kind of a perception of being a very trusted exporter.
Yes, absolutely.
So I think that is something which you will need to focus on, right? Yeah. You can go on, Farzan, if there's something else that you want to add.
I think that's about it. I think you can go to
okay. Aditya Lumba, many people are talking of pivoting into businesses that have a positive outlook in the future. I think we've taken care of that. Any hurried kind of a move is not something we would recommend. Because look, you have to understand this. We've gone through some of these shocks. And I just want to also point out to the fact that in 2008, when the global financial crisis hit every particular country in the world, India was not hit. And the reason for that is nothing else besides the fact that the government raised its fiscal deficit to close to 6.8% of the GDP. RBI went on a major easing up of the monetary policy. Okay, so for all of those of you who are concerned about what is going to be the government stroke RBI stance, I can, bet my last penny on the fact that the government and the RBI are going to be important reasons why we are going to see a turnaround.
Absolutely.
Right? So their role is going to be critical. So let's not be pessimistic about the role of the government and the RBI. Kardam, if your product comes under essentials, already in many states, interstate transactions have opened up. All right, thank you very much. Aditya, given current circumstances, in which quarter do you think we should start investments to pivot into new businesses? Yes, Farzan, do you want
I think if you're looking at new investments, I mean, two parts to it. If you're getting certain businesses that steal away valuations. I don't mean stock market valuations, but unlisted steal away valuations. I think you can look at it probably in this quarter, next, or probably Q4. But if you're looking at, probably making pure investments, I think look at Q1 of next year, not now.
I would also like to add here, Farzan, that, I am aware of several of these PE companies which are actually looking at steel buys.
Absolutely.
Okay, buys which are going to be real steels. The second thing on the capex, I would also want to provide a slightly different note from what Farzan had said. This is going to be the time when your interest rates are going to be low as well, right? So if you have the capacity, and if you are in an industry which is not discretionary, okay, I think it's a good idea for you not to really, and if you think that the demand planning is something which you're able to do well, it might not be a wrong idea to actually invest in some kind of longer term investments. That would be my viewpoint, for example.
Yeah.
We are into installation of rooftop solar power plants. Will the rebound in this industry take a long time?
Not really. I mean, it's. I think after this opening up is really concerned. I think your industry has problems which were different and not associated with COVID.
Okay. All right. Meet RBI guidelines being followed at PSU banks versus private banks. It's seen that private banks are not providing relief as well as the PSU banks are.
No. So just to answer that question, so a lot of not only private sector banks, let's not generalize it. Some public sector banks have been proactive in really reaching out to customers and saying that, listen, this is an offer, please go ahead. If you want it, let us know. At the same time, certain banks have not really been proactive. So it's a bank-to-bank case. If your bank, the bank you associated is not very proactive, reach out to the bank that, listen, this is what the RBI said, and this is what I think I'm eligible with. You have to reach out to your bank. It really depends. You can't generalize.
Okay. Just as a question, you mentioned that it's a good time for acquisitions. Would you suggest to go ahead with acquisitions to increase business and also consider just funding the acquisition through debt?
Yeah, so two things. As I said, please look at your situation in terms of if you're holding a substantial amount of cash and you have access to capital, it's a great time to look at acquisitions because you will get discount. As far as debt is concerned, if you're getting debt, it's probably at the lowest rate you will get debt today. If you get debt, I think you keep open and looking at it.
I think it's a good time if you have the resources to acquire.
Correct.
But it would depend on what are the kind of businesses you're acquiring.
Absolutely.
All right. Professional service industries such as architects, engineering consultants, which facilitate construction industry, how will these businesses get impacted and how should we approach the next few months?
Okay. So, as far as professional service, can someone mute that, please?
Someone has their volume turned up. Can you please?
Mute all.
Yeah, Farzan, please go on. Farzan, we can't hear you. You're muted.
Okay. Can you hear me now?
Yeah.
As far as professional services that are concerned, as far as architects, engineers, and so on and so forth are concerned, a lot of transition has really moved in terms of working from remote environments. A lot of firms, etc., especially international architects, have already been used to this concept of working on international projects from remote locations. So I think there's nothing really new as far as that is really concerned. they would be affected in terms of demand. I mean, it really how many projects that they will get assigned to, or how many projects that will offtake in the near future. But as far as working environment is concerned, it should not be a very big challenge as far as that is concerned.
Okay, Ram Dwarkani has a message. We have a finance business majorly in rural areas where they are giving out vehicle loans, SME loans, and so on. After lockdown, how should we move on? Should we start disbursements if people need it?
I think you'll have to really look at your credit appraisal, and you'll have to really look at your credit asset quality. You'll have to really look at how you're assessing it. On the whole, the quality of book may go down because after a lockdown, people may not have money as far as a lot of restructuring will take place. So, you'll have to really look at it in terms of who your target audience is and what practice in terms of credit assessment, that kind of thing.
Trust is going to be a major asset.
Absolutely.
Yeah. We are in the construction industry. There have been a lot of advisories being issued by the government in recent times regarding payments of wages and salaries during the lockdown period. Are these mandatory or only advisory in nature? I think these are mandatory. I'm going to move on because we are going to be having one more session, Meera, this Friday from JSB Legal, which is a HR legal company. So I think this is a good question to take up there. But I believe all these are mandatory, yes, right? You really don't have this choice. Okay, Shivam to everyone. Power sector, what is the view on demand and liquidity? As demand has always been there, but cash flow wise, it has been in stress always.
It depends on who your client is. If it is a state government, I mean, there could be two plans. One, if you're selling to the state grid and your client is the state government, or if it is private, consumption. If it is the state government, I mean, it's really difficult to call. You'll have to really look at state by state how things are. But as far as private consumption is concerned, when factories really reopen, I think it should be okay. I mean, it should not be a larger problem as.
Okay, Kardam's question: will the investment in land on a long-term perspective be a good idea? Purely depends on your cash flows, Kardam. And I would not suggest that you lock up your money in land at this point of time.
And also the value of the land. I mean, at what value you really.
Absolutely. With no direct support from the government to the SMEs, manufacturing sector, and blockade of cash flows in form of payments, what is your take on salaries to be given to the employees? Sanchit, we'll come back to this because this is again a legal question. I don't think you have a choice out there, right? Sanchit Goyal, how can we change the existing limits based on MCLR to the EBLR, RRLR? Banks are reluctant. Farzan?
Sorry, what is the question? I didn't get the question.
How can we change the existing limits from MCLR to the EBLR, RRLR?
I think it's already happening with most banks. I think that is.
Hello?
Yeah.
Farzan, go on.
1 second. I just trying to figure this out.
Gurjeet Singh, please mute your mic.
Yeah, I think that's already happening. That's already happening as far as banks are concerned. So over a period of time, that transition will happen in terms of this movement. So it's already in place.
Okay, I think we've taken up a whole set of questions, and thank you all very much for your for this very, very interactive kind of a participation. Thank you, Farzan, so much.
Thank you.
If there are any further questions, then we can take it up. We are going to have another session with Anant in the afternoon today. So hope to see you all in some of the other coming sessions as well. Thank you so much.
Thank you. Thank you.
Thank you, sir.